Georg, welcome to the show. I'm excited to go two different pitch decks again with another European. Today we have Presto from Bolivia and we have Talo from Argentina that we're going to go through today. So let's start with the first deck of the day. I'm going to share my screen over here. We're going to start with Talo from Argentina. Are you
Very
seeing the
exciting.
screen?
I see the screen. Thanks a lot.
Very good. So we have Talo Pay Incorporated that are operating in the crypto Web3 Fintech area. Crypto payments infrastructure for businesses in Latin America. Here we have a little bit of their highlights. They've been reaching some customers. We are seeing market penetration to multiple different countries. And here we start with their problem. Take a look at this and share your thoughts. So freelancers are unable to spend their income on their daily basis expenses. And most payment gateways harm the business.
Yeah. So let me first talk about the problem, because I think it's great that the founders started the problem, because that's truly where any business should start with. Freelancers are unable to spend their income on their daily basics expenses because I assume that it's complex to have USD wire to a wallet, unregistered exchanges to businesses. So I think my first question would be, what kind of businesses? Because I suspect that this is not, I would say, the problem that every freelancer has. And that's potentially a problem that's very specific to certain countries in Latin America. It might be all of them, but I suspect that this is a very specific topic. So I think from a European perspective, certainly not a overarching problem that every freelancer in Europe have, but overall, obviously, since the target audience is Latin America, this can make a lot of sense. What I do like a lot is in terms of that they describe a little bit more the commercials behind the problem. Ideally, they should have pointed out what's the 4% and 2.24% mean. I suspect it's the margin losses that occur in each step, but it would be great
to get a little further in depth on that.
Yeah. Most payment gateways harm the business. High costs derive in high prices for customers. Cash flow problems due to delayed settlements. Market sectors are excluded from client base, and merchants cannot charge a preferred currency. So I think on the last one, I totally agree. It's like if you want to charge a certain currency and this is not possible in a certain gateway, this certainly can harm your business. I suspect that a lot of merchants, at least business-to-business merchants, want to charge in US dollar, which I suspect that most gateways will offer. But for example, if you want to charge your merchants in any specific local currency, this might not be widely available.
True.
Market sectors excluded from client base. I think here I would expect a little bit more insight into what exactly they mean, because this point is not 100% clear to me. Third one, cash flow problems due to delayed settlements. This is something I could totally agree with. And this is, frankly speaking, this is a global problem. Is if the payout happens days or weeks after the actual settlement occurs, I could totally get behind that cash flow topics are important, and particularly important for countries with high inflations, because that's obviously when actually it's not just a liquidity topic, but it's a cash topic.
Absolutely.
High costs derive in high prices for customers. High prices are always a problem. The real question is, how do they solve it? And I'm very curious about that, because typically many businesses that enter a certain high cost area, they actually see the value in benefiting from these high costs rather than just trying to win basically just by undercutting the competition and price, but rather adding some sort of value that is unique to them.
Absolutely. But maybe we'll now be able to get a little bit more when we get into the solution over here. In their solution slide, they are trying to convey a message that frictionless crypto payment gateway, transforming traditional collections while keeping customer comfort intact. Choosing the preferred currency, instant settlement, broaden client base, and that unlocks growth opportunities in simple transactions.
Yeah. So I think generally speaking, it's a good slide. It refers directly to the problems that were described on the previous page, and they're essentially just saying they're doing it better. I probably would have expected a little bit more information on that, and especially I think there's the feedback that I just had on the previous page on what means that certain part of the client base cannot use it. What does this even mean? Because broadened client base unlocks growth opportunities. It's just not completely obvious to me. Maybe potentially the target audience will immediately know what they mean with that. But from a purely investor perspective, I would have expected a little bit more insights here. And potentially, frankly speaking, this page in general doesn't add as much value if you compare it just to the previous page, because it just says, okay, here are the problems, and we're solving all of them without adding any more
detail it is. So maybe we're able to get that now later on into this how more in depth, but at least for the time being, they're now offering a little bit about their traction, demonstrating that they made things really happen. Today, we empower small merchants to join the payments revolution. API, QR, plugin.
I would be so my first question is, what do the percentages mean? So do they potentially mean what percentage of customers are currently using, like 3 different types of integration? But it's just not clear to me.
Not yet.
Based on when I look at the presentation. Generally speaking, API, QR, and plugin could all function in parallel, so it's not necessarily mutually exclusive. So I'd love to see just a bit more detail on what does this exactly mean.
True.
To me personally, the one message that the slide conveys is that they're quite flexible and easy to integrate, but they could potentially provide more details in how they're doing it. Because otherwise, just saying we're easy to integrate is basically something that almost any company in the world would say.
True. And from here, we're seeing the how question marks. Hopefully, they're able to answer that even better. Here, the Fiat approach to Web3. We have learned from Web2, just a Stripe streamlined online payments. Talo aggregates crypto exchanges for global efficient transactions. They're making comparison directly to Stripe.
Yeah. So I think that's great. So drawing analogies with existing infrastructure, I think can help a lot. And frankly speaking, anyone that has spent some time in crypto payments will know the pain of various types of infrastructure, and everyone tries to kind of reinvent the wheel a little bit by themselves. Because obviously, in fact, you don't need as much infrastructure in crypto as you did in the fiat world, but such analogies help. There are obviously a lot of questions that come out of this as basically, what does this really mean? And who are basically the players in the different layers? But obviously, like Binance and Coinbase, everyone will know. Belo and Ripio and Lemon are obviously a bit more Latin American specific, but it's definitely would be interesting also to have a discussion about this. But generally, it's a good slide.
And there's a good sign in a way that you are getting intrigued enough that the questions are arising in your head. So it's not a bad sign that actually you're interested enough to want to know more.
Correct. That's correct.
Absolutely. Then if we go their business model, they make 1% of each transaction. Okay, pretty standard.
So this is pretty straightforward. Very simple business model. I like it that it's simply explained. I'm sure they have another slide that explains why this 1% makes sense and why it is competitive. But generally speaking, it's a good message that this business model can be so simplified to such an extent.
Absolutely. Then they're going towards their market and overall, demonstrating TAM, SAM, SOM. Thoughts on this? And overall about market size slides, what are you thinking when you see these?
I mean, in all honesty, like I'm one of the people in the space that I absolutely hate these market sizing slides because there's just so much BS inside them. And very rarely they even come close to anything. The one thing that I think helps is just to basically act as a sanity check to is the market big enough? Because obviously there are certain niche areas, niche products where you really have a fairly small market, but potentially in high margins. In this specific case, I think it's good to think about it, but to me, it feels like very much like a backup slide. I probably a fund would likely make their own assessments before they invest, they probably would look into the market, but this data itself it's nice to have.
Nice to have, but not the must have.
Yeah.
And that is basically what we have seen also with other reviewers in our show in the past. And the more we talk to investors is that, especially if you're an investor within that vertical, within that space, you know the market size and you know the problems relatively well. So then basically the numbers that are being thrown out here are, well, so-so.
Yeah.
And people don't really care about them, especially the investors who are looking at them.
Correct.
But why do you think that people still keep putting, so the entrepreneurs are still being,
So I think that the one information that actually does help on this slide is the biggest focus one. So basically, what is the real area that the company is focusing on initially? If I read it here, is seeing 20% of the monthly costs and expenses of 20% of freelancers in Argentina. That essentially tells me, okay, that's how they want to start. So honestly, like looking at the total addressable market, that's typically total BS. And in fact, it's just typically extremely large number.
True.
In fact, this one isn't even as large as it could be. I'm sure they could find a way to just add a zero to it.
True that.
But I would say the focus area, that's where they really want to start with. I think that's actually helpful. So thinking about, okay, they want to focus on Argentina. They expect to be able to reach 20% of the freelancers. That gives me some insights. And now I would expect on the next slide, or potentially on some details on this slide, how do we want to address these specific target audience?
Absolutely.
But I think it's great for start with something.
Absolutely. And from here, if we go towards competition, well, they're making very traditionally, very nicely visualized how they differentiate themselves from others. We have Coinbase, Binance, Stripe, Mercado Pago, a big dominant player over here in Fintech in Latin America, and then PayPal. They're trying to give a pretty good view.
Yes. So generally speaking, very traditional slides. Basically, any startup has it, and the own company is always in the top right corner.
Hopefully, otherwise it would be a little problematic if you don't believe that you're there.
Correct. However, ideally there is a little. I would personally, yes, I think this makes sense. Of course, you typically don't put yourself in the bottom left corner, but at the same time, it's so obvious that you typically want very specific dimensions rather than very generic ones.
Yeah.
So I think the dimension crypto versus fiat is more a binary rather than it's a binary yes/no topic rather than really a dimension. Sure. And I don't know whether I personally would be in the position to say whether coin payments is less strong on the right side than crypto compared to Talo. I just wouldn't be able to do that. And I don't know whether there is any justification to that.
Absolutely.
But generally speaking, I think I think what can help in such slides is having a little bit more dimensions to compare them with. So I think what can help.
What type of dimensions specifically? What are you meaning?
Looking at the, for example, target audience. If I would be particularly interested in companies that are focusing on the same problems that they're solving. PayPal, for example, I'm not sure whether they're directly comparable because any freelancer that can use PayPal at the moment will likely not necessarily see a need to use Talo in future because it's not the same problem. I feel that Talo is solving problems or wants to solve problems that currently cannot be solved by PayPal and potentially Stripe. So I would actually be rather looking into companies that are really directly comparable. And in that case, you can rather cluster it across more specific dimensions rather than saying interoperable and crypto. Talk about target audience. Maybe there's one focused on fintechs, the other one more on corporates, and the third one focused on private individuals.
Absolutely.
So different types of dimensions would be helpful here.
Cool. And then they are ending up their a little bit shorter pitch deck about their team and their capabilities behind it. And then demonstrate a little bit about their investors and more on traction. But I think that overall, we can now stop here for this deck. And what are your thoughts as a summary about Talo from Argentina?
Yeah. So first of all, I think it's a solid slide, I would say very well prepared, very well structured, at the same time, very classic.
Yeah.
It's I don't think that's that the deck is unique in any way. It's very classic. There are a few things that are missing in my opinion. So first of all, I don't think that there was anything that really would make them completely stand out and make them look so unique that an investor that has seen 10 different decks throughout one day would really remember this specific deck for anything specific.
Okay, I think that that's a valuable point.
So,
and it's basically when you see so many decks in a matter of day, in a matter of week, in a matter of 1 month, how do you basically raise this curiosity level in a way that people want to ask questions and know you more? That is the whole point when you want to stand out of the crowd.
Yeah. So I think having something specific, maybe like specific slogan, specific value proposition, specific, even if it's an image or specific, even best thing would be a specific problem that is so unique that you automatically would remember it. That would be fantastic. This I've been missing a bit. And the second aspect I've been also missing a little bit is a kind of forecast, like what do they need? How will they act as soon as they raised a certain amount of money now? So this I've missed a little bit because, frankly speaking, I don't really know what would be the next step.
But then it's up to in a way is that you have different versions of the deck. You can have multiple backup slides to support those things, and so it's just like how do people decide to what do we want to show in the first go.
But I think it would be relevant to understand where they are in the journey right now. Is it a company that has already significant revenues and now wants to scale? Or is it a company that is now applying for, let's say, a new license? So there's different stages which suddenly make the company relevant for different types of audiences.
Yeah.
And I think understanding where they are today have been relevant. Yeah. Because I read somewhere that they have already customers, they grew already 50% month on month. And these numbers I'd love to have seen.
And they are there, and it's like me as the moderator, I'm counting it out just as a disclaimer. The information was there. They're basically hitting over 15K of MR already. They have over 50 merchants. And so they are solid in that way. So they're moving forward.
Okay, perfect. Excellent.
But that was my decision to cut it down. So we can go to the next slide next. Of a Bolivian company from Santa Cruz, Bolivia. It's a company called Presto. We are now opening up their desk. They are changing the credit game in Bolivia, and that is a very big problem. There is no credit cards, as you can see here in the highlights. There is really a very low penetration in terms of consumer credit that is being offered. They're highlighting a little bit about their monthly active users and how many people are in the waiting list. Okay, that's pretty solid, but now let's get into their problem and their slides. They're starting up again that market penetration for credit cards in Latin America is low, and they're doing comparisons to other countries within Latin America and how Bolivia is very low. Oh, they want to market their number one in terms of reversing the scale that they have the lowest credit card penetration in the region, at least next to the.
This is a fantastic slide. Why? It's one graph. It's so, I mean, essentially, if market penetration for a very basic financial product is so low, it's just extremely obvious that there is potential there.
Yeah.
And in my opinion, this is a great slide because you're not talking about your problem, you're just showing the problem that people have. Because any investor that has been active in the fintech space, especially in the emerging market, has experience with low market penetration rates for certain products. Credit card is actually one product that is virtually inexistent in many countries. But to be fair, there are many countries that still are higher than 2.1%. So 2.1% it's a very fair statement to say it's virtually in existence. So that's great.
That gets you excited immediately, and then basically they're going to continue is that they are ambitious, at least, to say the least, becoming the largest credit card issuer in Bolivia in 1 year. The potential for credit cards in Bolivia exists, and it's massive, and that became very clear and obvious on the first slide already. And they're trying to demonstrate about Bolivia as its use case. There are 1.2 million potential low-risk customers, plus 5 million people still wait for the opportunity to have a credit card in Bolivia. There is a little bit less than 12 million people living in the country, 7 million using banks, 1.2 million low-risk clients and 250,000 credit cards. And they're trying to define a little bit what they mean about low-risk clients.
Yeah. So again, great slides. I like it actually more than the previous target total addressable market slide, because it's a bit more simple and very easy to understand. And since it's since here they describe also which type of customers they're focusing on, they're not just showing the numbers, but actually also showing on, okay, who are these people exactly? So I think that's the one thing that was missing a little bit in the previous deck. So I like it a lot. The fact that they're talking about low-risk credit clients, great. Showing what type of clients they are, great. So, and plus, by the way, the vision, I think is great. I mean, becoming the largest credit card operator or provider in Bolivia is a very straightforward vision. There are a couple of questions that come up, of course, quite simply, like why can you solve something that all the traditional banks have not been able to solve yet in Bolivia? But I'm sure that's something that the startup is very eager to
I'm
talk about.
pretty sure that they would be happy to tell you more about that overall. And then here they go continue more on the market size in Bolivia, the TAM sum of Bolivia only.
Yeah, makes a lot of sense. Here, the only question is, we talk a lot about Bolivia nowadays. Looking now about at the obtainable market, it's very small. So, so I think there could be some questions for investors. Okay, I totally believe that they could reach their objectives in Bolivia alone, but potentially I want to see a bit more how they're addressing also other countries, because Bolivia alone might not necessarily make them a massive financial VC case. We still could be still a massively successful company, but obviously big venture capital funds want to see ideally a bit bigger obtainable market initially.
True. And here they're then explaining a little bit more about them. 3 initial installments, interest-free. You decide how much and when to pay. Buy now, pay later. Plus, buy in up to 12 installments, 100% digital, minimum requirements, $300 credit.
Great, simple, easy to understand. I mean, I don't know, I'm sure they're addressing it somewhere, but the biggest challenge for credit fintechs is always, where does the liquidity for the credit comes from? And this is something they need to address in the deck. So if it's not being addressed, this is a big red flag, because at the end of the day, the success of this fintech, of Presto, will primarily depend on whether they're able to basically
provide
put up
liquidity.
with the liquidity.
Correct.
And not, this can't come from VCs. This needs to come from some cheaper source, because at the end of the day, they need to basically give the loan onward. And on the other side, the second aspect is credit risk management. So those 2 aspects need to be addressed in this thing.
Cool. We'll see where we're heading. If we now go towards product, they're trying to demonstrate the uniqueness like everybody else. But they mentioned that they only buy now, pay later product, while the other cards are providing only classical credits. They work with experts from Banco BNB to simulate it out, pay now, pay later scenarios, 100,000 cards using data from real users. Requirements, demonstrating their card.
Okay. So I'm a bit, it's not too obvious who this bank on the right side is. So maybe they should have at least put the name bank, or like average traditional bank in Bolivia here, to make it easier understandable. But other than that, I think it makes sense. The requirements, so it kind of, for me, a question is, okay, requirements seem to be very strict with the traditional bank, so they're less strict with Presto. That kind of essentially speaks a little bit against why are their clients really that risk-free, because they're having fewer requirements. Maybe an argument could be, maybe the traditional bank requirements are excessive for small credits, maybe. Fees, no, okay, great. In this case, maybe it should be more specific what kind of fees, because of course they're charging fees, just an interest fee. It's potentially just no recurring fee for the credits. The credit, okay, I see a much smaller credit, so they really focus more on consumer credits, I assume. The process is digital, that's perfect. Timing, 48 hours. It's actually, frankly speaking, 48 hours is not even that fast. There are a lot of companies nowadays that have also that give out real-time credits. So I think for me the question is maybe they can cut this a little bit down as well. And the audience, the only aspect is the audience 18 plus. That just means everyone that's an adult in Bolivia. That's a little bit vague, to be honest. I would have expected something like 18 to 35 or 45, because there is a big difference whether you also want to include people that are 45 plus in your target audience, or whether you're specifically focusing on more the younger audience below, let's say, 35 and below
Absolutely. But then we go towards unity economics. They're trying to demonstrate a little bit about how they make money. LTV, lifetime value, $12 when card is issued.
Yeah.
There is a range monthly. And then their customer acquisition costs on the growth stage.
So let me start with this, the CAC. Customer acquisition costs are incredibly low. If they can scale with this on a long term to, let's assume, a couple of 100,000 clients, that's fantastic. If they can scale beyond Bolivia to a couple of million clients with this, that's brilliant. Shouldn't be taken for granted though.
So what do you mean? What have you seen? Let's say you've been also operating a lot in Europe. You're also in multiple different emerging markets. You've seen a lot of fintech companies. Yep. What is usually the number here for the audience members?
It really depends on the geography. It extremely depends on its geography. So in Europe, we're speaking for such kind of businesses. We're speaking of CSCs that very rarely go below $30.
Whoa.
In some cases, it can be rather $50 to $60 in the BNPL space. In emerging markets, it can be very different. For example, I'm currently working in Egypt as well, and Egypt has much lower customer acquisition costs, maybe even lower than Bolivia, but the revenues might be even also lower than here.
Okay.
So I think generally speaking, $6 is a fair amount. Generally speaking, I would say if you can make more, basically, if you can earn back your customer acquisition costs within a matter of 6 months, that's great. So you always have to look into the CSCs in comparison to the overall LTV. When you're looking at the rest of the revenues, you're seeing that actually fits quite well. So overall, the slide within itself makes sense. Whether or not these numbers are specifically realistic for Bolivia, this needs to be validated. But I'm sure there are a lot of Latin American VCs that have a good understanding of this.
True. And here, if we go a little further, they're trying to demonstrate that they're the only non-regulated fintech in Bolivia with a Visa partnership, the first and only to acquire a Visa TPA in Bolivia. Okay, they have a strategic partnership with one of Bolivia's most traditional banks and the largest payment processor, BNB plus Red and Lace, or however you pronounce it. I think that this is also corresponding maybe the thought that you have about with whom they are collaborating with to provide liquidity.
That could very much be. For me, the real question is, of course, if the liquidity purely comes from another traditional bank, then they're in a very weird situation because their main partner is a traditional bank who is also a competitor, technically speaking. So it's just a little bit the question, is such high dependency on one specific partner healthy? And what happens if this partner just has a very high rejection rates of their clients? Because that can happen. I've seen that with bank partners. The bank partnership starts out strong, but then if 50% plus of their clients are being rejected by the bank partner and are not giving out the credit, then of course, Presto would have the customer acquisition cost, but not the revenue because they would have to reject these clients. So definitely, if there's a due diligence happening, this partnership specifically is something that there would be a lot of focus on during the DD.
Absolutely. But here, if we start going towards where we're running out of time, they are talking about the user acquisition framework of the Presto expansion. What do you normally think about these type of things? Do you want to see how they're how they think about their market penetration and growth?
So I think it's great that they show that they think about it. The reality is it's a very generic slide.
True.
So you could almost use it for almost any fintech or even any startup out there.
True
I
that.
I don't see any novelty here. So I think the slide would be more relevant if there's just at least one thing that is unique about Presto, how they want to grow compared to other startups. Otherwise, for me, it's a clear backup slide that you pull up if there's a question about how you grow. Otherwise, it seems to be very, very traditional growth. What I'd be curious about is potentially how will they reach the first 100,000 customers. So maybe this is, if you make it more specific rather than this very generic slide, but rather making a slide with saying, here's how we win the first 100,000 customers, this would be very interesting because this is, of course, basically brings the company to the first stage where, let's say, certain risk factors are being mitigated. Because investors will think about, will this company be successful? Will they ever reach traction? If they show more thoughts and be very specific about this first 100,000 customers or whatever threshold they deem important, it could be even stronger.
Absolutely. And they have a lot of more slides over here. Because we have time limitations, we're not going to be able to go through all of them. They're demonstrating the expertise of the team and their background as almost everybody does, and it's going to be absolutely needed. They have a lot of things about their business plan and their metrics and milestones and what they're looking for. But then I think that as a last slide, we could take a look on the quick wrap up that they're putting together about the results of 23, about their other team partners, finances. I think that this is a pretty solid that they come in and give a quick wrap up that I really like. I have not seen that personally.
I like it. Yeah, I do like it a lot. I think it's fantastic. It's a great way to wrap up the presentation and to stay memorable. So I think this is definitely overall quite a memorable pitch deck. Obviously, there are a lot of questions that come out of it, but certainly would raise enough curiosity to have a talk.
Look at that. And that is like, again, for the founders listening, this is one of the main things that you need to be able to write, make the intrigue level so high that they want to take a call with you. And that is very hard to do when people are taking a look on so many different decks on a daily basis, monthly basis, and so on. But again, overall, any last thoughts, final words about the two decks that we went through today? Freely.
Generally speaking, I think both are very solid decks. Both seem promising. They're definitely worth speaking to. I think the second deck of Presto was just a bit more memorable in terms of how it was structured. And frankly speaking, also how they're conveying their value proposition of being a very simple credit solution. They're also depicting and conveying in very simple slides. I like that a lot because they basically, they speak for themselves to a certain extent. Even if they wouldn't have used a single time the word simple, I would believe, based on what the layout I've seen, I would believe that they understand that they need to be simple.
Absolutely.
So that's great.
Thanks a lot, Georg, for your thoughts and your expert analysis. You've been working with many fintechs all around the world. You've seen a lot of turbulent times, a lot of how great companies have scaled. So I think that these founders as well, among other founders in Latin America, would be very keen to have a chat with you. And I'm pretty sure that they can reach out to you pretty openly.
Thanks a lot.
Cool.
Absolutely.
And we're going to continue the time over here. At least greetings from Buenos Aires is getting, I don't know, are you seeing my face is getting pretty hot. The AC is not working. So then it's like a good time to stop before we're sweating too much. Thanks a lot, Georg.
Sounds good. Excellent. Thank you. Bye-bye.